A financial crisis made in the United States of America exported to markets in Asia. The region's central banks pumped billions of dollars into the financial system in the hope of preventing a collapse. Can Asia avoid a recession that brought it to its knees almost a decade ago? This is Inside Story. Hello, I'm Darren Jordan. Well, for many lawmakers and central bankers in Asia, it's a nightmare they don't want to revisit. The Asian economic crisis in 1997 crippled the region. Businesses collapsed, unemployment soared, and hundreds died in subsequent food riots in Indonesia. At the time, Japan exported 40% of its goods and services to the rest of Asia, so it was no surprise when it slipped back into recession a year later. Our correspondent Margot Tigas is in Tokyo. She takes a look at how the economy and the people are coping with the US financial shockwave.
Tokyo, one of the richest and most expensive cities in the world. This gleaming metropolis is the very core of the globe's second largest economy.
This is Ginza, Tokyo's main shopping district. The luxury brands all have their stores here, but many of them have been reporting nearly zero sales lately. In the meantime, over here, people have been standing in a queue for hours, and this queue stretches for blocks. Just the shop here. Not quite a high-end store. H&M just opened in Tokyo last week. A call for order among the crush of consumers. From here, it's hard to tell the world is in the throes of a financial meltdown.
I bought 3 pieces, all for 16,000 yen.
That's around 160 US dollars. Cheap by Japanese standards. This woman traveled 400 kilometers and paid almost 300 US dollars for a ticket on the bullet train just to shop at H&M.
I bought this for my daughter. The quality is good and it was cheap. It was an hour and a half wait, but it was worth coming here.
All these people represent the new, more conscientious Japanese consumer. Money is still being spent, just that it's done so more wisely. The Yano family does the weekly shop. Their bills haven't changed much despite inflation. Junichi says they've made adjustments but aren't feeling much of a crunch.
We try to spend less on food. We try to find something cheaper, or we use the coupons or discount sales or whatever.
Discount stickers like these are given out by supermarkets every week. Buyers get to choose which items to label and then purchase for less than the marked price. Mrs. Yano says she didn't use the stickers before, but does so now. It's all about value for money, and similar sales are happening all across Japan. Consumers are not so much buying less as buying differently.
I don't think the crisis is happening. For Japanese households, they have not spent money over the even past 5 years of the economic recovery. Their saving rate has been very stable. Consumption has not picked up much. So we don't have any overspending issue for consumers as well.
The Japanese are not big on debt and have so far been insulated from the global financial crisis by their savings. The Yano family is still able to put aside 10% of their family income every month. But there are very real macroeconomic concerns. Japanese banks were among the major creditors of the now bankrupt Lehman Brothers. And reacting to the downward spiral of the US markets last week, Japan's central bank infused almost 100 billion US dollars in its markets to ensure liquidity. With exports down, the economy has weakened, raising fears of a coming recession. And there are political troubles as well. Crisis of leadership and confidence has led 2 prime ministers to quit in 2 years, just as economic growth slowed down. Many feel the government is out of sync with a public that has grown more and more disinterested, just as another change lies ahead.
I think if the economy can muddle through, I don't think the political situation does matter a lot. If the economy slows down a lot, and if the vacuum situation in broad sense continues for long, that should have negative impacts on the economy.
But many don't have much hope that yet another new government can spur economic growth. So Japanese consumers have adjusted their pace, queuing outside places like H&M and searching for a bargain. For them, the economy may have slowed down, but it's a long way from a meltdown. Margo Ortigas, Al Jazeera, Tokyo.
Well, joining me now to discuss the turbulent week and its implications are Jan Friedrich. He's a senior economist at the Economist Intelligence Unit's Global Forecast. Leong Zi-Hian, columnist and president of the Society of Financial Services Professionals. And Benjamin Pedley. He's the executive director and investment strategist at LGT Investment Asia. Gentlemen, thank you very much indeed for joining us on the programme. Jan Friedrich, let me start with you, if I may. It's been an extraordinary last week on the global markets. Is Asia better prepared to absorb this dramatic financial volatility, do you think?
It's certainly a lot better prepared than it was in the mid-1990s. Substantial improvements have been made in many fields in terms of macroeconomic statistics, in terms of structural policies. For example, many Asian economies still have now have a current account surplus, which is something very important to have in these very turbulent times. That will help to avoid a sudden capital flight. So they have made a lot of improvements, but that doesn't mean that they are perfectly insulated. They are exposed in many ways. They are exposed, in my eyes, particularly through the trade channel. Asian economies have become more and more open over the last 10 years since the Asian crisis, and that means that their integration with the US has even increased.
Benjamin Pedley, let me come to you, if I may. I mean, Jan makes a very important point there. I mean, many observers like Jan say that financial institutions, Asian institutions, have become much more conservative, perhaps, having learnt their lessons after the Asian crisis of 1997. So could Asia benefit from this crisis in the long term?
I don't really think so. If you look at what's happened over the past, say, 6 to 12 months, the institutions in countries where interest rates have been relatively low, like Japan, as you alluded to a little bit earlier in the program, they were forced in some ways to seek higher interest rates, and so they went overseas and they looked to invest in products that were exposed to the subprime mortgage market in the US. So they have undoubtedly been affected. I think the way that the global financial markets have evolved, it means that when Wall Street falls substantially, as it has done, and when credit markets seize up, it's a global phenomenon. Now, certainly Asia, from an economic growth perspective, is better placed to weather the problems in the US, but undoubtedly they will be affected dramatically, and they have already been affected both from a consumption perspective and also from a stock valuation perspective.
Leong, let's bring you in here, because Margo Ortigas made a very important point in her report there that some of Japan's biggest banks have exposure to the subprime crisis in the US. We know Lehman Brothers, for example, owes over $1 billion to Japanese banks. Is the worst yet to come for Asia, perhaps?
Well, I think it will get worse because the US government bailout is more than $1 trillion. Hundreds of billions of dollars have been wiped off the markets. Somebody is losing all this money. You have individuals, you have companies, you have foreign companies, foreign governments. So all this will move on to Asia, and we may go into a recession. We also have, in a sense, issues in Asia that are a bit different and may actually make the problem worse. At least in the US, you know the statistics for the subprime. You know how many people are in areas, you know how many homes are foreclosed. Now, in many countries in Asia, we still don't have transparency. We don't know. So is not knowing the problem a bigger problem? I don't know.
Well, we'll come back to some of those problems in a minute. But Jan Friedrich, let me come back to you, I mean, and just talk about that US bailout package that Leong raised there. I mean, should US taxpayers be paying $700 billion to bail out companies that have gone bust? I mean, John McCain, for example, says the Federal Reserve should be managing money supply and controlling inflation, not helping out busted companies.
Well, that's obviously the ideal situation in an ideal economy, but we are clearly not in that situation at the moment, so drastic measures are definitely necessary. There are certainly some doubts whether even this pretty drastic measure is sufficient. Of course, many of the details haven't really been worked out yet, and a lot still has to be clarified, but it's not clear how this will solve the entire financial problems. And in addition to that, there's still more issues to come when the real economy hits really back into the financial system. There's so many loans out there, so many corporate bonds that are outstanding, and that in a much weaker economic situation, in a recession, will no longer be able to be paid back. So at the moment, we've got a corporate bond default rate of maybe 1.8%. That's going to rise to 10% in a normal recession. So we haven't seen the impact of that yet.
Benjamin Pedley, let me stay with this US rescue package. I mean, does this intervention by the US government go against the very principles of the capitalist system, the opening up of free markets and letting the fittest companies survive?
Look, absolutely, and I would describe it as being akin to financial socialism. The bailing out these failed organisations and bailing out failed CEOs like Richard Fuld from Lehman Brothers, who some might argue that the bankruptcy process may even target his personal wealth because of the way he ran that company. And I think just as WorldCom and Enron were an indictment on the US financial system as a whole, I think that there are going to be some serious questions asked going forward about exactly what went wrong. I think undoubtedly the US taxpayer is going to bear the burden under these circumstances, and I think it's unfortunate for them, but I think really in some situations you have to have the government or the authorities as the lender of last resort. And the reason that we've seen financial socialism really emerge in the US is because no one else wanted to buy these institutions.
OK, gentlemen, stay with us, won't you? Because it's time for a short break now. But when we come back, how are ordinary people on the street affected by the crisis? And what's the future for Asian economies? More on that. Stay with us.